Welcome back, everybody. Good to have you still with us throughout the day. This session, very exciting because it really gets into the how can I invest aspect. So we've gone from a very high 20,000 foot level talking with Sunayana Tutasia at the Fed and Senator Lummis of Wyoming. And we're coming way down now to actually, how do I do this? What are the investment opportunities? And that's what this session's all about. The innovative investment opportunities in digital assets with three outstanding members of our panel. First, John Hoffman, the head of America's ETFs and index strategies at Invesco. Of course, we all know Invesco, one of the biggest ETF issuers in the world, $1.5 trillion in assets, including $500 billion in index funds. The Qs, everybody knows QQQ, nearly $200 billion in AUM, one of the most traded securities in the world. Mitchell Dong, the CEO of Pythagoras Investments. Mitchell has managed hedge funds for 25 years. He founded Pythagoras back in 2014. So he's got a 7-year track record in trading crypto, one of the longest track records in the space. He's a graduate of Harvard College and Harvard Business School. And Greg King, the CEO of Osprey Funds. Greg is an expert in crypto. He's launched over 100 ETPs, including the first VIX, broad-based commodities, FANG stocks ETPs. He's co-founder of Velocity Shares, which was acquired by Janus back in 2014. He then founded Rex Shares, an ETP provider with $2 billion in assets, and he's been a Bitcoin investor since 2013. So we've got three huge major players, each with a very different place in this ecosystem. Invesco, one of the biggest ETF managers. Mitchell Dong, one of the oldest crypto players with an accredited offering that he'll describe. And Greg King, who is one of the three key players offering OTC trusts that are available both as private placements for accredited investors and in the open marketplace. So three very distinct opportunities, and we're going to launch into all of them, starting with you, John, at Invesco, of course, one of the largest global asset managers. Tell us first why somebody like Invesco, a traditional asset management company, one of the biggest, best known brands in the field, why crypto? What interests you in crypto, and what's Invesco doing in terms of its product development in the digital asset space?
Yeah, so Rick, I think if we frame this up a bit, we're talking about a technology. It's about a technological innovation, and all technological innovations, it's always about efficiency, effectiveness, making things simpler, easier, better. And blockchain is a disruptive, technological innovation. And new technologies always, create a platform, and the use cases for those on that platform, start to really multiply. And so blockchain, the technology, has spawned the birth of digital assets, obviously Bitcoin, then Ethereum, you've got stable coins, we've got DeFi and NFTs now. And so we're in the middle of a technological revolution, the birth of a new asset class, all, triggered by this breakthrough that is blockchain. And so, we see a lot of comparisons of this to the internet. If you look at, Bitcoin compared to the internet in terms of adoption and penetration, in the metrics, on an equivalent basis, 0.5% of global adoption, we're in the late 1990s would be kind of the parallel here. And if you think back to the 1990s of the internet, and now fast forward to today, what has been built on that technology, all the companies, all the, an entire industry was spawned out of that. And so, Bitcoin and digital assets and cryptocurrency, it's 12 years old now in many ways. The use cases are piling up. We're seeing some of the largest pensions in the US come into this space now, family offices, endowments, foundations, corporations. Last year, we saw Mass Mutual, one of the oldest insurance companies in the world, come into the asset class. The country of El Salvador has adopted this as its currency. And so the network is getting bigger and bigger every day on what is a fixed supply. And so, look, this is about technology. And at Invesco, we look forward to the trends that are developing in front of us, and we have to be paying attention to this space. And quite frankly, the advisors that we work with want our help in navigating that. And so over the last couple of years, we've been very, very active in the product development. We recently launched 2 equity capabilities. So SATO, nod to Satoshi Nakamoto, and BLKC, a blockchain equity capability. And so providing access to the companies that are building this ecosystem. And obviously today, a big day, the futures product launch. I'm sure we'll see more evolution out of that. In a few days, we'll probably see options trading on that. So this market is developing right in front of all of us. And we are in the early days here. And look, at Invesco, we're committed to driving innovation in the space, but doing it with a safe and steady set of hands, Rick.
And Mitchell, what you're doing is totally different from what John just described. I mean, I really don't know of two, more opposite approaches to the space. So talk about the funds that you have, two funds. Talk about those funds and your investment style and approach.
Sure. Thanks, Rick. So we are not buy and hold long Bitcoin or any crypto. We're short-term quantitative traders. Our first strategy just takes advantage of an inefficient market in doing arbitrage, pure arbitrage. So, for example, we would buy Bitcoin in the United States and sell it in Korea or Japan for a 5% price difference. Our secret sauce is buy low, sell high, anytime the software detects an opportunity. And our second strategy is a trend following strategy, both long and short. So if the technical indicators that are borrowed from the commodity trading area, if the technical indicators indicate that it's going up, we go long. If we think it's going down, we short. So we're particularly proud of the fact that in 2018, when Bitcoin was down 80%, we were up 16 because we were short most of the year. So our idea is to produce an absolute return fund, both long and short. For our arbitrage strategy, same thing. Our goal is to consistently make 1 or 2% a month and never be down, just taking advantage of inefficient markets.
The ETFs that Invesco offers, obviously ordinary ETFs, meaning they're routinely available to every investor everywhere in a brokerage account or directly from the fund company. Your funds are not ordinary ETFs. They are private placements for accredited investors, yes?
Right. No, they are private placements. They're known as hedge funds, and they follow SEC regulations for offering private investment funds.
And talk about the account minimums.
It's 100,000 as an account minimum.
Got it. And Greg King, you are one of the three key players in the trust side of this game. Grayscale and Bitwise are the other two players. Osprey's got a little bit of a different approach, particularly with your fee being lower than the others. Talk about, if you would, the approach that you're taking with the products you're building and how they work and so on.
Sure. So my background is started with Barclays, actually built their iPath ETN platform. And the whole reason we did that in partnership with what was then our sister company, iShares, was because commodities are difficult to get into the 40 Act. So we invented ETNs, and that sort of spawned a sort of semi-industry behind ETFs. But that's what got me into exchange traded products in the early 2000s. And I've kind of been fascinated ever since, but always playing around the margins. Mitchell and I were talking before the session. He was talking about trading uranium and being in the kind of more esoteric parts of the market. So I've found that my career has headed in that direction with commodities, with VIX products, and now with crypto. As you mentioned, Rick, I invested personally in 2013, and once you have a position, you start to take interest. It wasn't until 2015, though, when the CFTC said that Bitcoin was commodity, that I started to get serious about perhaps putting a product together. And keep in mind, that was already 2 years after the Winklevi had filed their Bitcoin ETF application in 2013, if you can believe it. That was 8.5 years ago. So we started to put something together. And in fact, under the parent company of Osprey, Rex Shares, we filed for the exact product that was launched today, a 40 Act fund trading Bitcoin futures. It seemed like the least worst option if you're a regulator, which I think is finally proven true. But at that time, the SEC was, they needed some time to think about things. The market was a little green. So we regrouped in 2018 and formed Osprey Funds and decided to pursue launching products that would take the format that Grayscale had pioneered with the Grantor Trust. And at the end of the day, these are really very simple trust structures that hold a physical commodity, in this case, Bitcoin or some of the other coins. And they trade on an OTC basis. They're not allowed to have a redemption feature, unfortunately, because that would effectively make them more or less ETFs, and they're not allowed to be offered publicly. If you take those two things away, or if you add them, which we hope to do to the Bitcoin fund, then they do become physically backed ETFs. But in the meantime, what we're doing, just to take a step back, what we care about is we care about offering access to investors. I'm a very open-minded person who believes that people should be able to invest where they want to, with obviously an appropriate amount of oversight. But beyond that, pretty libertarian about the market. And so Osprey is building out what we think are some of the building blocks for investors going forward. We have 5 single asset trusts, Bitcoin, Polkadot, Algorand, Solana, and Polygon, with more to come. And we see these as investable products for both retail and institutional investors. We have $10,000 tickets, and we had a $50 million ticket. So everything in between. But we actually see that these products could also be used directly by fund managers, 40 Act managers who want to take a view on a particular cryptocurrency. So this is the beginning where, in the 1990s or whatever the parallels you want to draw, we won't always stick to single asset trusts. But at the beginning, the place to begin is at the beginning. So we're launching single asset trusts on layer 1 protocols, and we'll expand from there.
So disclosure, I'm an investor with all 3 of these gentlemen's products, and big fan because they're each so very, very different. So from a diversification play, it is additive, I believe, across the board rather than redundant. And Greg, to that point, what you're doing is providing the investor with the direct exposure to specific coins without having to open a Coinbase account, for example, without having to go deal with private keys and connecting to their bank accounts and doing all that kind of stuff. You're making it very simple and easy. And you mentioned 5 very significant coins, each very different in the marketplace: Bitcoin, Polkadot, Algorand, Solana, and Polygon. How did you choose those particular coins? For example, Ethereum's not on your list. So how did you decide which coins to build a trust for, and what other products are you thinking are coming down the pike?
So it's a great question, and we really have nothing against Ethereum. It was slated to go, but honestly, the way that these products trade, there's a supply and there's a demand, and unlike ETFs where that imbalance can net off on a daily basis through the market making, these products are different. The inventory has to be held for a year, sometimes shorter, and so on. So this imbalance leads to premiums and discounts. And as most of the audience will be aware, the Grayscale fund was at a premium for years and years. And earlier this year, I think it was about 2 weeks after we hit the market, not saying it had anything to do with us, it's really probably more the Canadian ETFs launching, and then the 27 filers who filed for a Bitcoin ETF, the whole complex went to a discount, right? So, and that includes the Ethereum fund. So launching into that environment didn't seem to make a lot of sense. We moved into the pipeline and accelerated some of the products where we could be first to market and really add some value to the ecosystem, bring products out that people hadn't seen yet. And so we launched Polkadot as our second fund and have gone from there. So it's really nothing against Ethereum, but to answer your question, how do we select them? I love having this conversation with investors because everyone's just somewhere on their journey here. And you were very generous to say I'm an expert in crypto. I'm definitely not an expert. I've been learning for 8 years and I've still got a long way to go. That's one of the cool things about crypto is you never stop. But we're focused on the layer 1 protocols. And what do I mean by that? I mean the technologies that are shooting to become part of the furniture, right? Part of the infrastructure of the future Web 3.0, of the decentralized economy. So if you look into those particular coins, for example, Polkadot or an Algorand or a Solana, you're going to see that these are infrastructure plays. And to John's point earlier at the beginning, this is tech investing, is what it is. It's coming in a different format. But I find that I still have to make that point often, because a lot of people have heard about Bitcoin and they sort of see the whole crypto thing as a play against gold or the US dollar, and they hear all these things and they kind of conflate everything. That may be true about Bitcoin and a few other currencies that are trying to fix the fiat currency problem, if you will. But a coin like Solana, for example, has nothing to do with that. That's trying to create a very rapid transaction platform that could disintermediate, worldwide exchanges. So you have a whole host of projects that a lot of investors are unaware of in terms of their emerging tech profile, which is really what we're focused on.
John, you've been in the ETF space for a really long time. Invesco, of course, a pioneer there. I'm assuming that you're seeing parallels between the growth of the ETF market. I remember back in the early 2000s, ETFs were out there, but they didn't have much market share. There wasn't much AUM. Compare that to today, where they have net inflows and mutual funds have net outflows. The ETF world has just matured incredibly and skyrocketed and representing a $1.5 trillion in assets just for Invesco. Do you see parallels between the growth of the ETF market and the coming growth of the digital assets market?
Yeah, I think, Rick, there's tremendous parallels. And maybe to Greg's point, I mean, when you look at this as a technology and you think about ETFs as a technology, ETFs are and were a disruptive innovation in asset management. I joined the ETF space 16 years ago or so. The market was $200 billion in the US. Today, it's a $7 trillion market. So it's grown 30 times during that period. And what we see in digital assets is incredibly similar. Again, ETFs are a technology. They're a technology for delivering investment returns. They're not an asset class. They're simply a mechanism, a technology for delivering investment returns. And they're a highly efficient mechanism for delivering investment returns for all the reasons that we all know today. And if you go back 15 years ago in ETFs, we had the same topics right in front of us. It was scary. They were new. There was new words, new vernacular. We didn't have smart beta. There were no fixed income ETFs. It was new. It was a new technology. Some of the benefits of the technology, the tax efficiency, and those things weren't well known. And there were a lot of people talking about how this was going to end badly. ETFs were going to break. How many articles did we see on that? They were bad. They were going to break under stress. There was a lot of fear and uncertainty, similar to what we see in this market today. But there was also a huge amount of energy building the ecosystem, the roads, the plumbing, market makers, building technology to facilitate trading. There were research companies helping investors select ETFs. Exchanges were doing a lot of work around the trading of ETFs to accommodate this. So just massive amount of building to support the industry to grow to where it is today, $7 trillion here in the US. I remember doing presentations back in the early 2000s in hotel ballrooms, 2005 and 6. And we would say, if you don't like change, you're going to hate irrelevance. And the idea was you have to embrace this technology. It's not here to replace you. It's here to make you more efficient. And so, the same thing with this technology. There's huge energy. The roads are being built. The plumbing is being built. We are literally creating the ecosystem, right in front of our eyes today. And the technologies, they all tend to have network effects, which is, again, just a fancy way of saying the more people that are on the network, the more valuable the network is. And so this network is getting more and more valuable every day because there's more and more users globally that are on this. And so, again, similar to ETFs, we saw 10 network effects play out in ETFs. We see similar network effects in digital assets. It starts with speculation. You've got merchant adoption, consumer adoption, security. You're seeing the financialization now, futures and ETFs making their way right into the traditional financial system. And so the parallels are actually pretty incredible. It feels like we've seen this movie before, in the sense that both are just technologies going through adoption curves, and both have these network effects. Both seem very, very simple on the surface. And I think to Greg's point, you can continue to pull this back and it continues to have a lot of complexity behind it, but that's part of the beauty of the design. It's very simple on the surface, but has tremendous value to the end user. And so a lot of parallels between the two spaces, Rick.
So what I would like to do as we wind down this session, I want to allow each of the three of you to offer a blatant promotion. I want you to tell us why advisors who are watching this program should consider investing with you, particularly with the approach that you take in the crypto space. And Mitchell, we'll start with you. Why should investors establish accounts with Pythagoras?
Well, if you hold Bitcoin or don't hold Bitcoin, our goal of our returns and performance is to outperform buy and hold Bitcoin on a risk-adjusted basis. So we'll have a better Sharpe ratio, a better Sortino ratio, a better Kalmar ratio, and we'll make money in bull and bear markets. So if you're concerned that Bitcoin is very volatile and could go down, well, our funds will make money if it goes down. As long as there's change, our arbitrage fund will produce consistent returns.
And Greg, talk about why people should choose the Osprey trusts.
Sure. So our goal is to be a trusted guide in the crypto space. We're not launching every product under the sun. There are thousands of cryptocurrencies. We take our time, we do our homework, and we launch what we think are trusts built on promising protocols that have a significant potential for future appreciation. Obviously can't guarantee that, and these are passive products. But accredited investors also could benefit if we're able to achieve a ticker symbol for these products from secondary market liquidity, which may be at a premium. Also can't promise that. Our existing fund, OBTC, is out there, and investors can, it does have a ticker, and they can buy it in the open market at prices that are attractive to them. So that's something to take a look at these days, I think.
And John, talk about the Invesco ETFs.
Yeah, so look, I've mentioned it a few times. This is a fast-moving technology. It's quickly evolving. We believe that education is key to making the best decisions. And so we're going to push the boundaries of innovation, but we seek to do it, in a safe way. And I think we bring together the risk management and experience of a $1.5 trillion asset manager and the innovation of a firm that's really pioneered many parts of the ETF market.
And one final question I want to ask you, because this came in from our audience. Yes. And Mitchell?
Yes, we're putting ourselves on several IRA platforms.
Okay. So thank you very much for that information. That was John Hoffman at Invesco, Greg King at Osprey, and Mitchell Dong of Pythagoras. Thanks, gentlemen, for being with us on the program. We are slated now for a 20-minute time for you to go to the exhibit booths that we have here as part of the virtual conference. We're going to extend that time to 25 minutes because we were cut a little bit short earlier today in your opportunity to do that. And there's terrific information for you available there in those chat areas. So we're going to reconvene in about 25 minutes. It's 3:18, let's call it 3:20. Add 25 minutes onto that. So we'll reconvene after that. And I'll see you back here for our next session in piling onto the last question, investing in digital assets in your retirement account. So enjoy the exhibit hall, and we'll see you after that.
Thank you.